So what are some of the challenges in converting other payments for the consumer? So there is cash being prevalent in the economy. We understand if the merchant is digitized, the merchant transaction by the consumer is going to get digitized. But what other methods, what other payment use cases do you see as a potential which can be converted, and as a result, we can get rid of this larger cash in circulation? So your view on other use cases?
Whatever workflows there are, right? Whether it's the value chain, whether it's employee payments, whether it's all collection, disbursements, cash flow management, we enable businesses to do this more efficiently, in a more scalable manner, and in a very cost-effective manner. In the end, it's about becoming more and more competitive. And you cannot become competitive, right? Because in Pakistan, it's been a protected economy, and that's why that those levels of efficiencies haven't been required. But now, as we open up, as we want to grow and scale, you need to make these things more scalable by making it more efficient and more real time. So this is what we do. We are basically enable financial infrastructure. I mean, when I say this, you say, oh, banks do this as well, right? Initially, when we started out, I invested in the largest agri-tech company in Pakistan called Khabar Kisan. It's got millions of farmers they work with. But we try to work with banks to be able to integrate those payment rails into the whole ecosystem. And it was impossible. It took us 1 year of negotiation, figuring out how to make it work, and people changing. And they just did not have a focus around these things, right? They were focused, they're making so much money on others' easier things, right? That this was not, even though everybody talks about digitalization of payments, right? Especially the big banks, that even some of the banks are calling themselves as digital companies and internet companies, right? But the reality is that they're focused on the high net worth market where it's easy to make money. And they haven't focused on these areas where the margins are thin, where you need to really work closely with companies, and you have to build a lot of technology which integrates, like many of my colleagues mentioned, the keys integrates effortlessly into their systems, right? Their ERPs or payroll systems or whatever, to be able to do this effectively.
GDP ratio last year, the FBR ratio was 8.8%, and overall country's ratios is hovering around 10% of GDP for quite some time now, 2 decades almost. So what we are now doing is that trying to use this information to generate or to broaden the tax base and also to deepen the tax base. So a lot of digital transformation is right now taking place with the help of World Bank, Remit, and also the Karandaz and Bill and Melinda Gates Foundation. So what we are doing is now, 5 days ago, we started this swaps program in banks, the withholding payment of 153B and 153A, which is now linked with this RAST system of payment. So the payments made by the banks, it's a small, humble start, are now accompanied by the information is coming in, and also accompanied by the tax with it. We are a bit reluctant to expand this to all of the universe of taxpayers because, as rightly pointed out, the use of credit card and digital media for payments is limited, and hence we fear that we do not induce recession into the economy by moving so much away from the business practices. The business practices of credit, the payment is not usually linked to the taxation thing, and hence we are a little fearful about linking all the payments and making them go on RAST, and we want to stay close to the business practices so as not to suppress the demand or induce recession.
And what we believe is that the real cashless economy we can achieve through is by digitizing the payments towards the retail, towards the merchant. And I think Umar talked about a little bit on the merchant side and the distributor side and invoicing side as well. But I think the real money or the real strength lies in the merchant domain. Because until and unless we do not provide the opportunities to the customers to make digital payments, we will not be able to digitize at all. People are bringing money into the wallet, but majority of the time they cash out because they have lesser opportunities in terms of spending the money. Because still the online payments, it's there. For example, in case of JazzCash, we are processing around 16 billion worth of GMV on the online payments, but still it is not good enough. It is not spent on grocery. It is primarily spent on consumer products. So the grocery domain, the Kiryana store, mom and pop shops, that is the opportunity which is there, and that is the area where we are expanding. The challenge that we face primarily over there, a bit Umar talked about, it's not the MDRs we see that the merchants are reluctant on. It's about the taxation coming on board and getting into the eyes of the tax man. And secondly, it's also about once the money comes into the merchant's wallet, how they're actually able to utilize that money further, because they receive the payment and then they cash out again.
So if you look at the recent quarterly payment system review, 85% of all value of payments are still over the counter and cash, either check or cash. So even though number of transactions are predominantly now digital, but the value of transactions, that means the big throughput ticket, is still cash or check. That is largely B2B payments. That's where the B2B transactions happen, because these are payments that happen that are above 500,000 rupees, as high as 20 million, 30 million rupees, a single transaction. And that still remains outside the digital network. So within this theater, we have close to about 250 trillion rupees of payment opportunity that's ripe for digitization. What we've been able to accomplish in the last 4 years since we've been commercially doing this is almost 2.6 trillion of that now is mandated to move through us.